What's up, guys? Welcome to my full uh, trading strategy revealed uh, for Forex are the indexes like futures, obviously S&P and Nasdaq. So this is kind of a guide for everything. Whatever you trade, you could trade stocks, Forex, commodities, futures, whatever it is, this is the strategy that I use, and which has had me seen obviously significant success over the past month or so, and it's led me to kind of obviously get a funded account in the process of getting my first funded payout. So I'll just start run through it quickly, explain to you guys what it is, and then I will hop in for some examples on the charts and how we can find it, and how obviously hopefully you guys can then use it to make a bit of money trading like I have. So my trading strategy is pretty simple. It's a 4-step strategy uh, that can be broken down into obviously 4 steps with certain confluences. So we'll start off with step one. Obviously, you can see it's finding areas of liquidity on the 1 hour and the 4 hour. So I'll probably better if I do this on the 1 hour. Liquidity lies obviously, as we know, at highs and lows. Obviously, what is a high is a move up and then a move down, and then a low being the opposite, a move down and then a move up. So we know that liquidity lies above highs and beneath lows. So an example here, really easy to find out. Here we have a move up and a move down. We should take the highest point out of them two, and that's the high. Move up, move down, highest point is there, and then a low. Exactly the same. Here we have this black candle, which obviously is a red, blue candle, which is obviously a green, and then we pick the lowest point, and that's a low. So all we wait to do is for price to come up, sweep out that, take out that high, and then we look for rejections over here. Example, we can see move up, move down. Here we see we come up, push price, and then we move all the way to the downside. So that's a quick guide on liquidity. So we wait for that on either the what we mark these areas out on the 1 hour and the what the fuck. Don't know why that's glitching out. Anyway, wait for that on the 1 hour or the 4. We just mark out them key levels. So if I was going to trade, if I was trading on Wednesday, I'd be like, right, there's 1 hour high, there's a 1 hour low, and I wait for them to be took out. So that is what that step one is. Step two is we just wait for this area liquidity to be swept. So for example, if we were trading at 7 o'clock on Tuesday, for some random example, we see a move down then a move up, but on point high. Here we can see that there has been a sweep of liquidity. As we can see, we can push press that, so that is our liquidity sweep, which would confirm step two. Another thing that I've recently added into my strategy is I've noticed a lot of time market opens and it'll just move quickly to one side and without taking out any liquidity. So to try and combat that and make as much money as I can, and obviously be the best training version of myself that I can be, alter my strategy slightly, and instead of waiting for liquidity to be swept, obviously that's my first sort of like thing. Yeah, let's sweep liquidity. But if I don't, then I'm on the 5 minute looking for confirmation that we're going to move towards liquidity. So for example, if we open the market and I see bearish order flow, we start to go at the downside, but then we start to, without sweeping out liquidity, move to the upside. I'll show you an example later on. It's easier if I explain it. So say here, market opens at this line and we're kind of forming bearish order flow here, and then without taking out any liquidity, for some reason, because the market just does this, we start to make legs up. And I'm on the 5 minute looking for a kind of confirmation that we're heading towards liquidity, which for me is in the order of a breaker structure. So we're moving past this high here, and then I'd be trying to look to enter maybe towards a high that's further up here. Obviously we can see this high, moving for price to come and take out this high, as we know, because liquidity is a magnet for price. So it's kind of like another way to trade, is kind of instead of trading liquidity sweeps, is trading towards is trading towards the liquidity, as opposed to, well, why can't I delete that? Yeah, instead of trading in confluence with the liquidity, is using the liquidity and trading towards it, which is kind of something that I've just recently added in, which I've found and tested that it works. But more on that a bit later on. And then step three If there is a liquidity sweep, then I'm waiting for a 5-minute retrace. So say we're on the 5-minute chart, for example, and I don't know, we come out and take out liquidity here. Then we make jokes that I'll be looking for this 5-minute candle to retrace and then go up. So within this price range, I'll be looking to try and take a trade. So I wait for a 5-minute retrace and the candle to close, and then I'm in on the one, as it says, on step 4, in step 3, still if trading towards liquidity. Then I wait for a 5-minute confluence, such as a fair value gap, and some of the other confluences that are listed on that list. And then step 4 is to scale down to the 1 minute to find entry. So say we tick all our boxes, we get a liquidity sweep. We get a lick sweep, and then we 2 get a 5-minute retrace. I've ticked them 2 boxes. Then step 3 is in the 1 minute looking to execute, and that is for both trading towards liquidity or trading off liquidity sweeps. So let's talk about next sort of step is looking at the confluences that we'd use to trade them. And these works on any time frame, anything for both of my kind of 2 separate legs of the strategy. We obviously have breaker structure, which you all should know. Breaker structure obviously is when we push past the high or close below a low. That's classed as a break of structure. An order block, which is the move up before liquidity sweep. So perfect example is here. Very quickly, see, we come up here, take out liquidity, order block. This is the leg up that caused the liquidity sweep. So this is, for example, an order block. As you can see, the one move up that caused the liquidity sweep. We can see it's a pretty good magnet. We come up back into it quite later on, and then we see big rejections out of that. So that is an example of an order block, which we can use again on any time frame. It's done that again, for fuck's sake. A breaker block, which is sort of the opposite to an order block. For example, it is the move down. It's the move down before the move up that takes out liquidity. So for example, again, if we kind of go back to this, obviously we take out liquidity. The move down before the move up that takes out liquidity is here. This black candle, that is the order block, and we can see more recently that it has. See, we come up, retrace into the order block, and then we see big dicks down. So that is a breaker block, sorry, not an order block, that is a breaker block. We'll try and maybe find an example where we go to the upside. Perfect here. So this is the low. Take this out. What is the order block? Is the leg down that caused the move up. So these black candles here, that is the order block. So we come back down into that. And then very similarly, breaker block is the move up here before the move down. So kind of in similar areas, the breaker block is just maybe a bit shorter. So you can check and trade off either. That is a quick run through of order blocks and breaker blocks. We have a fair value gap, which we also know I did cover that. 3 candlestick pattern, as you can see here. 1, 2, and 3. You just take the middle wicks between them and draw a little box. And as you can see, magnet for price. Price comes up here, touches down, and once again comes up here and touches down. And rejects off the fair value gap. And then we have an inverse fair value gap. Very, very similar. All this is where a fair value gap gets inverse. So for example here, with a bearish fair value gap, and you can see we get a candle close above this fair value. Oh, another one also noticing down that I did forget is a BPR, which I'll come to probably right now. Is where obviously we can see there's a zone here. This is when we inverse fair value gap and create another fair value gap. The zone where these two cross over is the BPR. So the BPR is then this zone here. Which we can see obviously didn't get any rejections, but that's a BPR, a really useful confluence to use. Next is equilibrium, and then we've kind of covered all the confluences. This is probably the simplest one to understand. All it is taking your GAN box, which you can customize. I'll show you my customizations right now actually. These worth copying these down because they're pretty important. Is these settings, and all you do, take it from range highs to range low. So from here to here, from this high to this low, and then price will come, retrace up into 0.5, which is the halfway point, which is where kind of discounted price, and then reject off it. And then in the other direction, we can see it here, range lows to these highs, come down in this equilibrium area, and then we rally off that. So that's kind of me walking through all the confluences, and now we can go through in real time examples and kind of patch it all together. So everyone was just going past, but this is what kind of gets very, very interesting. So let's go on the 4 hour, for example. We'll just kind of snipe them out together and go through them. On the 4 hour, do we see any liquidity sweeps? Yes. Take out this high here. So what do we do once we do that? We go into the 5 minute, because we took out liquidity. See, that's probably not a good example. Let's find a good example of a good trade that we could have took. Probably some of these here. 4. Maybe a 1 hour. Yeah, it was a 1 hour sweep. I remember this trade here. 1 hour sweep of liquidity. We get that at a good time when I would be trading. We got that at in PM session. So here I obviously had this hourly low, this hourly high marked out as a profit target. And you can see, come down, sweep out the low. So now I'm in the 5 minute time frame, waiting for my retrace, which we got here at 45. So we've got this retrace at 45, then I'm in the 1 minute, if it'll go back this far. Never mind, bollocks. I need to find a more recent example, I guess. This is not great for the video, but we'll work through it, we'll power through. Probably easier to go on the 1 hour, to be fair. Do you know, we'll go with this example that we've been using quite a bit. We take out this high, then we're in the 5 minute. Looking for our retrace. Obviously we take out, we get a retrace with this candle. You can also do not draw a 5 minute order block. Obviously then leg up that took out liquidity. Order block within here, obviously this gets filled a bit later on, but you can also have that drawn out. You see we get our 5 minute retrace, and then we're in the 1. Please let me go back. Just about 1, swear down. I mean, you could wait for that 5 minute confidence bar lag to enter quicker. This is the 5 minute retrace. So you see, to be coming to equilibrium, probably extend that up. Yes, we just about wick it. Yes, we have a fair value gap within here, and it just honestly moves like clockwork once you understand and grasp it. Honestly, this 5 minute order block, pretty pointless. Probably turn that into a order block here. You can see this leg up here, a leg up here, so that's an order block. This candle here, enter. After we see a rejection here, stops above the fair value gap here, and then take profit. Previous hours liquidity here, even down here. As you can see, we run off, and that's a massive risk to reward ratio. If you really wanted to be nitpicky, all the way at the bottom, obviously we're being realistic, so probably about here. Still a 1 to 3, that's a really good trade. So hopefully you guys can see how it all, comes together, it all gels. Obviously my trade recap is up on my page right now, so you can see how I used that confluence. Unfortunately we lost. However, we did just about lose. We did bottom tick. Sort of just bottom tick. maybe try and find one more example for you guys before I call it a day. Obviously, as usual, any questions, just ask me in the comments. Liquidity sweep. Let's go up the 5 minute. Oh, we could have an entry here. Quite liking that. Sweep liquidity, 5 minute retrace. Any 5 minute confluence is to be filled? No, not really. So then I'm in on the 1 minute. This is our 5 minute retrace, highs to lows. Come up here, fill equilibrium. Take this order block from here. Come up, fill that. And we could enter straight off that. Could enter here if you're being a bit more aggressive in the market. Take profit here, or you could wait further for a break of structure. Mark that there. Lock it here. Target previous areas of liquidity. So you can either end it up here, down there, it doesn't really matter, it just depends how risk adverse you are, but you're still looking at a banging trade, by the way. When was that? I don't know why. Oh, I was a bit later in the day, that's why I didn't check it. So that is a full run through my strategy, guys. Hopefully you understand it. Like I said, any questions, drop them in the comments below, or either get in touch with me in other ways, but hopefully you guys understand that. That's kind of how I trade. Anything that you can do that I think I can make it better, anything that you guys use. Obviously I'm always looking to get better, level up my trading, so just let me know. Thank you guys for watching, I'll see you in the next one.